Well, in the last 24 hours, we've seen prospects for the Democrats improve, but they still favour the Republicans and Donald Trump. If you look at the situation a week ago, straight after the assassination, the betting markets were saying something like a 67 or 68% chance of a Republican victory. Now that's back down to a 59% chance. So still favouring Republicans, but a bit of a boost for the Democrats.
Chris, it's been reported the Democrats have had their biggest online fundraising day in years in the wake of Joe Biden's announcement. If the Democrats are indeed seizing this moment to reset, what are futures telling us about how US markets are likely to react?
Well, I don't think it could have gone any better for today for Kamala Harris, to be fair, except for the fact she hasn't been endorsed by Barack Obama. But I think financial markets are not getting overly excited by what they've seen. We obviously coming off the back of last week where tech got smacked. The Nasdaq was down 3.7%. Semiconductors were hit very, very hard indeed. But I think people are saying that the process has still got a long way to go. We need to actually see Kamala Harris step up to the public and address them. She hasn't been formally announced as the nominee yet, so there's still a lot of water under the bridge. So a good first step, and I think it's going to be a lot closer than where we had it before, but the markets are not getting overly excited at this stage.
Chris, do you think any investors who made so-called Trump trades after the assassination attempt on Donald Trump are likely to reassess their positions now that Joe Biden is no longer the candidate?
Well, one could argue that happened late last week anyway. I mean, we saw a lot of the sort of in the equity market, we've been sort of front running the idea about potential deregulation under a Trump presidency and a potential red wave. The idea about greater fiscal spending if they could pass a lot of fiscal measures through the House. But I think some of that got re-questioned into the back end of the last week. Obviously, there was a lot of conjecture around Taiwan, both from the Biden camp, but also from the Trump camp as well. So I think some of that got unwound. And I think it's probably still a bit too early to really put on the FX trades, the idea that running long US dollars into the election if we were to see a red wave because of some of the protectionist measures through tariffs. Still too early to put that on. The other one is in the bond market where people were looking at these so-called steepeners where 10-year yields were expected to go up more aggressively than 2-year yields. And again, you know, that's been unwound to an extent. So I think the market was anticipating this announcement to an extent.
Shane, what about cryptocurrencies? We've heard a lot of money has been flowing in past weeks into crypto. Trump himself says he'll be the first crypto president. Is this a pivotal moment for crypto?
Well, it could turn out that way. Cryptocurrencies over the last week or so, Bitcoin in particular, had been moving higher as betting markets and the probability of a Trump victory were increasing. But there's a lot of things impacting crypto. And of course, you could also argue that the shift towards lower interest rates in the US, the potential for the Fed to start cutting interest rates in September, I think that's probably also boosting the crypto trade. But whether Trump turns out to be a great supporter of crypto or not remains to be seen. I think to some degree many Republicans maybe like the idea of crypto because it's seen as an alternative to the Fed and the central government in the US. So it's seen as a bit of an anti-establishment bet in favour of crypto. But as we know with crypto, it can bounce around all over the place, and I suspect that's going to remain the case.
Chris, what's your view on crypto, given what you already told us about the Nasdaq being down 3.7% last week on the back of concerns about US tariffs on semiconductor imports? Do you see a bit of market volatility still in the months between now and November tied directly to the election races?
Well, just on the point of crypto, I mean, I think Shane makes some good points, and it really did diverge last week between other risk assets. But if you look into the Bitcoin ETF complex, there was the third biggest inflow into ETFs we've actually ever seen since the inception of those. So people were obviously getting set into those positions, and there's real momentum. So I wouldn't be surprised now if we were to see 70,000 coming into play, whether that's a reflection of the election and the potential leader of the free world backing that corner. I do think we're going to see higher volatility going forward. I mean, ultimately, volatility is driven by uncertainty and people trying to price the future and trying to price risk and getting some clouds around that situation. I think if we were to get Kamala Harris as the nominee, which I suspect is the very, very strong likelihood of it happening, I think it does breed higher uncertainty. And obviously, the big situation is whether or not we do see a red wave, and that brings in a J.D. Vance, Donald Trump ticket. And the idea about strong protectionist measures playing through tariffs, which won't go in the form that what they suggested, but they will be pulled back, but there will be tariffs playing through. And ultimately, greater protectionist measures, I think, will create higher volatility. But a lot really depends on the polls. A lot depends on Kamala Harris coming in and, being presidential effectively in that situation. But I am expecting higher cross-asset volatility to play through.
Shane, what are you expecting in terms of market volatility and in terms of uncertainty? Are you expecting that whoever the Democratic presidential candidate ends up being, whether their platform is likely to differ much from Joe Biden's?
Well, you can make an argument that having an alternative to Joe Biden in there on the Democrat side adds a little bit more to policy uncertainty as to which way that Democrat candidate would go if they are elected as president. But I think in the great scheme of things, their policies will ultimately be pretty much the same as the program that Joe Biden was offering. But I totally agree with Chris. I think we are going to see ongoing volatility in the run-up to this election. We know that July is often a strong month for share markets, but we also know that August and September are often pretty rough, and that can continue a little bit longer when it is an election year in the US. And this talk about tariff hikes, it does add to the risks that investors face. We know back in 2018 that the US share market took a bit of a tumble. It was partly on the back of interest rate hikes from the Fed, but partly also on the back of the trade war at the time. And we know that Trump is going to go down that path with JD Vance. That is going to create volatility, I think, in the months ahead as investors trying to factor that in. Yes, there's positives on the Trump trade, potentially lower tax rates, deregulation, but I think the prospect of an enhanced trade war will act in the other direction and add to uncertainty.
Shane, you touched on the Federal Reserve earlier. Just briefly, are any of the developments we're discussing likely to influence how the Fed Reserve will look at the cash rate in the States in coming months?
Well, I guess there's a couple of issues here. The first one is, do they cut or do they wait till after the election? I think on occasion President Trump has suggested they shouldn't cut because of the the election on the way. I think the Fed will have to do what it thinks is right, and I think it will do that. And I think it will have to cut by September. The US economy is slowing down. There is a risk of recession in the US. Inflation is fading. The broader issue in relation to the Fed is whether a Trump administration, if they win, tries to curtail the independence of the Fed, to curtail its inflation-fighting credentials. And I think that would be a major problem for investment markets if we saw that. There is a lot of faith in the Fed to do the right thing, to keep inflation down. If it falls into the pocket of the government, I think a lot of faith would be weakened and there would be more concern about US inflation if that occurs.
Chris, just to wrap briefly, I'll get you to respond to what Shane just had to say.
Yeah, I think the Fed cut rates. I think the issues that are at hand, if we were to see a red sweep by Trump in the White House, and obviously both sets of Congress, chambers of Congress being put in the hands of the Republicans, the big issue for me is obviously whether they roll over the 2017 Tax Cuts and Jobs Act in full, plus the other factors which could increase the budget deficit by some $4 trillion over 10 years. That would be obviously inflationary at a time when goods prices are still too high for a lot of Americans. That's an issue that I think really needs to be tackled over the long term. We have not seen a plan really to bring down spending. With tax cuts and deficit spending, it's going to be a very, very strange issue for Americans to deal with. It means longer term borrowing costs are going to go higher. And perhaps that means that Trump will lean on the Federal Reserve to try and bring down long end yields. We'll have to see. But I do think in the short term, though, I think the Fed will be looking firmly at inflation data, jobs data, and they'll be cutting rates in September. I don't think the election changes that.
Chris Weston, Shane Oliver, terrific to talk to you both.
Thank you.
Thank you.